Hi, let's review Y-2 or round two for the simulation, and let's look at net profits per team. And we see that number one place last year, or last round, is now number one place this round, improving their profits from 58 million to 81 million. A fantastic showing, keeping to do strong. Now, there's a number of companies that surpassed the $60 million mark in profits, and that is really excellent. Fantastic work. Some companies that may have underproduced profits last round, listened to my video, followed the instructions, read the user manual guide, and was able to greatly increase their profits moving into the next round. So some of the teams with the lowest points, and look at this team, as far as profits, 19 million last round, moved up to 64 million this round. So a vast improvements in profits, and you should expect net profits always to improve because the industry is growing at double-digit percentages, sales growth. So hopefully your profits can grow along with the sales. Now, points per team, we did have one team lose points last round, but this round they were able to turn that around to make over 671 points. And that's a great thing about the simulation, because if you do have a round where your points are weak, if you put the work in and you read the student user guide, watch my videos, think about how the finance and the strategy of running a company comes together in producing the product, marketing the product, manufacturing the product, and ultimately making a profit, how these elements connect together and connect all these business classes together on how to run a company. Remember, the ultimate goal of the company is to maximize shareholders' wealth, which means you need to increase profits. What do investors expect? Increasing sales, increasing profits, but most importantly, increasing profits, because that's what's going to help increase stock price, which maximizes the shareholder wealth. So your strategies have to be unique, that sets you apart from your competitors, but in a way that you can excel and make profits. So if we're going back to points, we had a team here last round that only made about 278 points, and now they skyrocketed to 864 points. So if you do make the right decisions and you turn things around in your company, you can make a generous amount of points as you're working in team competition. But it's tough because you're competing against all the other students. So this is not the practice game against easy computer players. You're playing against a bunch of smart students running a number of other teams. So you have to be, top of your game. And we have the same three, as far as stock price, the same three companies, but they greatly improved their stock price, more than doubling, in some cases, their stock price from the previous year. And they did that by increasing their profits and their earnings per share. But most teams, by and large, were able to increase their stock price somewhat because it is a growing market in revenues and profits, and investors like that. So as far as sales, we still have the same number one in sales, Mighty Motors. Number two is Team 2, which moved up from sort of towards the last third of sales to number 2 position. And we have a new number third in Green Cars. Only about one team actually had their sales reduced, which is unusual because most teams should shoot for increasing their revenues, increasing their sales. As the industry as a whole, we're seeing double-digit growth in the sales. Now, as far as earnings per share, you see some companies moving down, most companies moving up. We had one company here actually move from last to fourth place. We have the same first place company, but the second place company is now the third place company from last round. This company moved from second to third, and third place, Lucid Motors, moved up to second place. And then we have one team here. This team here had a very good increase they were down here at $1.96 earnings per share, and it moved up to $6.49 a share. So some teams made some very impressive earnings per share moves and increases over the time period. Now, if I go back, we look at the scoreboard. This percentile rank is that looks at the past 5,000 teams that competed in the simulation across the country. So this team here has done better in current round points in the past then probably more than 4,990 teams. But you want to look at your total points, your cumulative points. If you scroll down to find your total points, you see that Car World and Ash Motors and SMB Motors and JR Motors all did better than 90% of the past 5,000 teams in their total points, cumulative points for the round. So that's important. So teams are doing, by and large, most companies are doing very well in this simulation. If you look at, I'm just going to pop into my solo game where I had recently completed round 3. So you're done with round 2. I had moved ahead to round 3, and I had done, if we look at the industry, when I completed round 1, I had 700 points. Round 2, 483 points. In round 3, I got 531 points. So I've been playing the practice game at the same point you are, where you've just completed round 3, and now you want to review your results. So for round 3, you want to look at, actually, I'm a round ahead, and you're just completed round 2. I'm in round 3. So you want to see really how your year over year has changed and your percentile improvements. A key thing to point out is that you want to make sure that you make your operational investments to get those 100 points. If you double your spending in operational investments, you make that extra 100 points. And you want to make sure you have a surplus in your cash to get that 100 points in your cash surplus. That's why I always keep at least 20 million in my cash surplus to make sure that I don't fail at that. Okay. I'm going to go ahead and reset my practice game back to round 1. So you can, unfortunately, I can't move back to round 3 or 2. I can only go restart all the way back to round 1. So I'm just going to reiterate what you should do each round. I'm starting back at round 1, but these principles follow through all the rounds. So, for example, I want to see what my customer expectations are, how important these features are to my customers as far as their, how they decide to buy the car. So 25% of the decision on the economy is going to be their fuel efficiency, which makes sense, and the price of the car. So as we've done before, as I'm filling this out, I'm looking at trying to, things that are important, I want to be on the higher end of the customer expectations. Things that are not important, I can actually be below my customer expectations and hope that customers don't notice. For example, how many luxury features does your car have? What is the engine power of your car? What is the fuel efficiency of your car? What is the months of warranty on your car? You may not know the answer to all these questions because they may not be important to you. But if fuel economy and cost of your vehicle is very important to you, you probably do know what the fuel economy of your car is, and you probably do know what you paid for your car. So this is where I'm saying not all customers pay attention to all facets of their vehicle. So for each vehicle, it's a little bit different. For example, trucks, maybe the customers focus more on the engine power and how strong the truck is because they may need it to pull heavy loads in their business. What's the capacity of their payload and things like that. Okay, so sales price, you want to have a sales price that's going to make you money. And now, since this is round 1, year 1, and I want to be above 40%, my starting point, and I always shoot for 5% above the starting point. And again, if you want to know how to do the forecast, which I said before, you got to look at that student manual. And you got to see, go to the forecast area to understand a little bit more about how businesses work. And they're very nice in giving you an example forecast. So, and this is very helpful for your year 1. You shouldn't copy this forecast identically. This is the average of what you'd sell if your car was identical to every other car being built. So if you feel like your car is better than other cars, you may want to forecast a little bit higher. So I don't think this car is the best. I'm going to forecast a little bit lower. And then you move on to the sedan. So it's the same thing with the sedan here. I'm going to try and, where it's not as important, I'll put some lower information in. Where it's important, I'll try to increase it. And here I was able to get a pretty high gross profit margin. So I'm going to go back and I'm going to maybe push this up a little bit. This was a little low, so I have some room to spend a little bit more money to make my car more attractive. So again, I want to be above 40%, ideally 45%. I'm getting a little bit higher here in round one. So I'm going to go ahead and do the second car here, which is the truck. And I wasn't quite able to make that 45%. So I'm going to go ahead and lower. There, I'm at 45%, which is my goal. And I'm going to finally do luxury. And I can go above or below these customer expectation range. But I do get a warning if I go too far above or too far below. And I'm going to put in my sales price. And I am at a nice level here. Put my forecast in. I'm going to go a little bit higher because I think this car is a little bit better. Then I move into the marketing area. And again, as I explained before, these targets don't affect anything. So these aren't going to really change anything. They're for the role play. And I'm going to break up my investments here. I'm going to invest a lot in television and a lot in newspapers because those are the areas that wind up having the most influence on sales. And then I'll just put some money in the other areas as well. Now, I'm going to pause here while I do the other cars. It takes a bit, and I'll meet back in production. Okay, so now I'm in production, and I'm going to want to buy my production plants. I don't want to buy more than I need. There's no point in buying more production plants than I need, and I want to make sure that I have these operational investments, which are critical to moving my company forward and keeping my company competitive. Round one, as you know, because you already went through round one, does get a little expensive on assets. So you may have to borrow some money to move ahead in round one. Because I am going to be investing heavily in both the plants, which are assets, and the operational investments, which are assets as well, as I buy more equipment, more software, things of that nature. So it is, as you remember, round one is a little asset heavy, which makes it difficult to do well in your asset turnover and your return on assets as you increase your assets faster than you're increasing your profits or your sales. Okay, so once I complete that, I want to check, and I see that I have a deficit here. So in the first round deficit, I'm going to, I want to have a surplus because I don't want to lose 100 points here. So what that means is it's going to be tight because I don't think I can borrow enough to cover all that. So I might have to go into production, and I might look to see where I don't think I could cut back on any of the production plants. So I might have to pull back a little bit on my operational investments. To lower that overall deficit I had built up. So I don't want to do that because those operational investments will help me moving forward, but I didn't have a lot of the cash. And I have a much smaller surplus here. So I'm going to actually look to borrow some additional funds. And this brings me to a $7 million surplus. And, I'm going to do something a little unique here. I'm going to actually buy some stock back because stock is really cheap right now. So I could lower 1 million. I can take away 1 million outstanding shares of my outstanding stock, which will help my per share variables. So I'm betting that if my forecasts come in are really good, I should be able to maintain this surplus. But this is a very narrow surplus. I should really have more like 10 million and later rounds more like 20 million to protect myself from unsold vehicles. So I'm going to complete year one. And you'll see after I complete year one, we'll see what the results are. Okay, so I made, luckily I was able to keep that surplus. They made 1,000 points in year one, which is spectacular. Now, don't feel bad if you didn't make 1,000 points in year one. I've been playing this simulation for a long time with students, so I kind of know what the inputs are from years of practice. And you can see that my quick ratio went down, yes, because I borrowed money, but my revenues went up. My debt ratio was good because my equity went up faster than my debt. My profit margins increased a great deal. I knew my return on assets would be low, and my total asset turnover and return on assets would be low, but I was able to earn points in the other financial asset areas. My capitalization, my forecasts were better, except for truck. Truck was, it was improved, but it wasn't quite 100%, and I had those operational investments, a nice surplus. So if I go look in production, I see that, yes, I had some trucks that weren't sold, but overall, I did very well in that forecast. So like I said before, I'd go into my assessment, I'd review my assessment and then my hints. I'd look at the charts to see what, specifically on my performance charts, I would want to look at and see where I am in relationship. So all my other charts I did pretty well, but luxury, I could have sold another 138 cars, and for sedan, I could have sold another 200 cars. So this is the difference between the yellow and the blue band here is the amount of cars I gave up to competitors because I didn't have a big enough forecast. Okay, so if I can look at the industry to see how my competitors did compared to me, get some ideas, review my financials, and I'm back into sales. Which here, my operational reductions have went up, but you notice that for a lot of people, round two was a little bit harder because now you're trying to build a car, better than you did in the previous round, but it gets harder because the customer expectations go up. So even though the price of the car is higher by about 500, I still have a hard time beating that previous profit margin because I didn't make enough investments in my operational investments. So I'm going to have to go in and lower okay, so now I got this. I'm going to have to actually go in and lower my features to try to get that 5% increase in the my overall gross profit. Because there's no point in moving forward unless I can improve that gross profit. So if I look at, let's go back to the forecast again, and I want to see in year two where I'm at. And I might forecast a little lower now because I'm not going to be able to make the cars as best as I want to. So again, I'm going to go in. Now I'm working on the where have I left off? So I just finished this one, and I'm going to put in the forecast here. I'm going to go 2600. And I'm looking to build a car better than I had made before. But I might have to give up some features because customers' expectations have gone up. And that's going to be hard. Okay, here I was able to increase my forecast. But my car isn't as good as it was last round. But I am getting that almost a 5% increase here, but this is really 4%. But it's difficult without a strong amount of operational cost reductions to keep that up. Let's see, this I was only able to get. So as you know from last round, it's difficult to keep pushing up those profit margins when you haven't made a lot of operational investments. And I think that has happened to a number of teams. And so luckily here, I have a pretty good high profit margin on. But I am going to have to pull back a little bit trying to get that 5%. And there we are at 5%. Okay, so now that sales are done, I'm going to move into my marketing. And of course, marketing has, increased. But as the industry grows, more money is going to be spent on marketing. So as I do this round's marketing, I notice that there's been an increase. So I'm going to have to increase all of my spending in marketing. I don't want to leave any of these areas untouched, because if I don't put any money in radio, then somebody else will move in, put the money they put in radio, will get them customers in radio, and I'll lose all my, even though there's not a lot of customers who buy from radio, I don't want to lose any customers. So it's important that you spread that money around, heavier on the areas that are more important, So in here, it seems like pretty much newspapers and television are the most important areas, so I don't want to miss those. Okay, I'm going to finish this out and meet you in production. Okay, so now in production, I'm going to have to buy, again, some more production plants, and that's going to be expensive. However, this round, I also want to move up my operational investments, because I'm realizing without these, it's becoming difficult to keep my profit margins where I want them to be. So I'm moving them. In most cases, I'm trying to double my spending, because that will give me 100 points if I move that spending up. And I can see any unsold inventory I can resell the next year. I guess they update it to make it the New Year's model, and I can reuse that inventory. And here I don't have to buy a production plant, which is going to save me some money. And also here I won't have to buy. I have enough capacity where I don't have to buy a production plant, which again will save me in operational investments. Okay, now that I'm going to finish my production data, and I'm going to see where I am in my cash surplus deficit. And I'm going to try and keep at least, this is round 2, I'm going to try and keep 15 million in there, and I have 30 million. Okay, so what I'm going to do is I'm going to go back to production, and I'm going to just buy some more operational investments. Since I can afford it, I'll put some money in operational investments and spread this around a little bit, and then see where my surplus is now. Now the surplus, if I have any extra money, I may want to, I have 20 million. So I'm going to turn around and I'm going to retire some funds a little early here, but I think that this is a gamble. I'm hoping that I won't come up short on my forecast, and I'll be able to improve my overall debt levels. I'm not going to buy back any stock this round, though. So let's see when I complete round 2, and now I'm caught up. So now I'm in round 3, like everybody in the team, like the real team competition you're in. I'm in round 3, and it's a little bit easier for me because I'm doing against computer players, and you're playing against other very smart students in the class. So if I look at the results from year 2's finished, I can see that I made 486 points, which is pretty typical. Year 2 is tougher than year 1. Year 1's the easiest year to make points. Moving forward, anywhere around 400 is the average points for a really good round, is to have 400 points. So I was able to increase my revenues, my quick ratio, and my debt ratio is better since I paid down some debt. My profit margins went up. I was shooting for 5. I only got from 49 to 53, which is 4 percentage points up on the gross profit margin. I'm always shooting for 5 is a good level, but it was difficult because I didn't have enough operational investments. So as I moved through, I did lose some points on the asset turnover and my return on assets because I bought a lot of assets. My return on investment because I made a lot of investments, but I haven't seen a return on these assets yet. This should improve as the simulation moves forward. And my equity was reduced compared to previous rounds. So I got to work on building a little bit more equity, which means increasing my stock price faster. My capitalization went up. My forecasts were good except for economy. Was the only one I was a little slightly down in economy, and I had a surplus. So I got 100 points for that, and I more than doubled my operational investments. So I got 100 points for that. So then I move into reviewing my assessment, looking at my charts, and specifically this performance chart. Like I said before, you want to see how you've done. So all areas, I gave up, actually, I forecasted too low again. I could have forecasted higher in all my cars except economy. So I gave up some vehicles, which is never great to do, but at least I didn't have that deficit. So I could review the industry, see what my competitors have done. I can see my total points here are 1,400, which is I'm pretty good on track. And remember, I'm coming off a very strong year one, so it's very hard to do a great year two when your year one is so strong. But what's important now is I moved up my operational investments. So now when I make my car, so if I just start at the baseline here, let me just, oops, I'm getting all these errors. Okay, let me start at 30. Oh, come on. There we go. Sorry about that. Start at the bottom of all these. Okay, so you see that profit margin is 45 compared to last round's was 51. So I'm going to have to go here and make some sacrifices. So here, I'll bring this down. I'll bring this down. Okay, so now I'm able to get it only 4 points higher. I want 5 points higher. So I'm going to have to hit it where it hurts. Okay, so now it's a little bit, I'll move this up again. Okay, so now I'm going to, tweaking it a little bit, I can get to that 5 points higher. That's my goal. And it helps that I have this cost reduction here. Otherwise, I never would have been able to make that. I'm actually going to lower my price a little bit to make my cars a little bit more and still be up. There we go. Just want to get as close to that 5% as possible and then put my new forecast in and then move forward. So that's what you're going to do. You're in year 3 as well. So that's kind of the goal of what you're trying to do is increase these gross profits. You want to increase your sales forecast. And there's nothing like the user guide to help see what that, so year 3, 3,418 is what I should be able to sell. So that's a big step up. So I might just go 33 because I don't feel the car is as competitive as it could be. So I'm going to forecast a little bit lower. And, I could actually, maybe I'll go 35 and just spend more in advertising to make up create that extra demand from advertising. Okay, well, that's all the time I have now to go over this. And I think I've given you a really good base of what you should have done the first 2 years to move forward into the simulation. I don't want to do year 3 because I don't want to really, hand year 3 over like I did the year 2 to a lot of people. I want you to kind of develop your strategy and your financial goals to make it to the top of the competition. So best of luck to you, and I'll be very curious to see how everyone does next round. Take care.